Hello traders and welcome to another video review. Today is Tuesday, May 9th, 2023. Let's find out what's going on the Forex calendar today. What you can see here are data for the Tuesday. As you can see, only one was very important, and that was the retail sales data from Australia, already released deep in the night. We got the BRC retail sales monitor from the UK. We got the data from the Japan household spending. As you can see, is decreasing rapidly in Japan, minus 1.9%, and the forecast was 0.4%, previously 1.6%. We will definitely have to take a look at the Japanese yen, of course. And then, as you can see, we have the data from the UK again, Halifax House Price Index, last reading 1.6%. Those data are from the UK. We got the speech from ECB Lane at 10 o'clock, and then during the New York session, we got EAI short-term energy outlook and speeches from the FOMC member Williams, ECB Schneibel, and at the end of the day, API weekly crude oil stock. So maybe we should take a look at the oil market as well. But first, let's take a look at the US dollar. US dollar, as you can see, is having problems with movement to the upside. The reason for that is that the recent pattern that I think markets are trying to develop. It looks roughly like this, like a big falling wedge pattern. So if you take a look here, you will see that this wedge might look something like, it's partially channeled. However, of course, it might look something like this. For example, if we take the extremes into the consideration, it might look something like that. If we zoom out, you can see that this recent, we can even zoom out even more. There you go. So this movement here to the upside might be ending with this big falling wedge pattern. So far, there is still no breakout to the downside. It looks like this pattern has not been completed yet, but roughly it looks something like that. So what kind of information we have from this pattern? Well, it's obvious that we should prepare for another movement to the downside. The last swing high is located at 1.1096. There's one more swing high located at 1.1092. So those are the technical resistances, and the technical, of course, support eventually is 1.0942, and then there is one at let's say that's a very important one, 1.0910. Okay, so the technical supports and resistance levels are already on the chart. We have this whipsaw price action going on this market. We are going above the moving averages, below moving averages, above the moving averages, below moving averages, and this situation with the moving averages is looking toppish as well. So what we should do is, of course, switch to the daily time frame chart and see if there are any clues on a daily time frame chart, like any sort of the candlestick price patterns, reversal patterns in our situation. If they are not, of course, market can continue to the upside. So that's the euro dollar. Let's find out something on the crude oil, and there is something interesting here. Very big spike to the downside on a 4-hour chart. So what do we have here is 63.69, and that will act as a technical support. If we zoom out, we can see that the target was 64.12, but during this strong movement, this low was broken just a little bit, and then very strong rebound on the oil market. Let me just zoom in back on. so you guys can see what do I mean. And there you go. This is the current situation. That's the technical support. This is of course the technical resistance. And I don't know, guys, if you remember, we were talking about the situation when this gap gets covered sooner or later. That's the resistance as well. Another very important resistance, 74, 70, let me just take a look, 73.94 or $74 per barrel. We have a cross, moving averages cross, 50 to 100. And of course we have the situation where the market is trading below both of these moving averages, which means apparently that the bears are in control of this market. So how much did we retrace? Let me just find out how much did we retrace during this this bounce. So what do we have here is a retracement, and okay, other way around. It looks like we retraced like 38% or something like this. Let me just find out for you guys. And it looks like yeah, it's even 50%. So the 50 is at the level of 73.61, and this is exactly the last high we've made, the last local high we've made. So let me just, there you go, that's the 50% Fibonacci retracement level. Let me just find out one more. It's a 61% Fibonacci retracement level, and this is 75.97. So that's the current situation. Very big, nice bounce towards the 50% of the Fibonacci retracement, but we are still below the technical resistance. So the market is ready to reverse lower anytime. Right now, momentum is quite strong. Momentum is definitely positive, and there is still room to the upside because we bounce from the extremely oversold market conditions. So this is why we should be, the bulls should be still prepared for another movement to the upside after the pullback is of course completed. So please keep an eye on the 50% Fibonacci retracement, technical resistance for any signs of a breakout higher towards 61% of the Fibonacci retracement. And because of the situation of the Japanese yen, let's take a look what's going on here. Oh, what a very smart chart on a 4-hour chart. Look at this. We are getting rejected from the 50 periods moving averages, and now the market trades just below two of these averages. And why this is kind of funny, because that's not very often when you see the price action like this, which is why every time I see it, it's very interesting to me. This kind of a market behavior. So this looks clearly like a corrective movement, corrective pullback to the upside. Let's find out again what kind of a retracement did we made just recently. So we got this high, we got this low here, and there was 38% of the Fibonacci retracement here, 135.15. The 50% Fibonacci retracement is 135.65. So there is still a room to the upside. Momentum is kind of positive, trading around the level of 50 up towards the 54 points. So it's not bad. At least it's not visibly clearly negative. There might be another movement to the upside, and then we should see some sort of the breakout to the downside. So our plan for the US dollar to Japanese yen is the wave A is done, maybe wave B a little bit to the upside, and then wave C to the downside, because this is the directional movement. And on a daily time frame chart, this might look very good for bears. I mean, there can be some sort of the bearish engulfing pattern or dark cloud cover, which are of course the bearish candlestick patterns. So that's the current, let's say that's the current outlook. Let me just put the 61% line on this. There you go. So that's the potential for the wave B, and then we should see the wave C to the downside to develop very, very soon in impulsive manner, just like this wave was done here. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.